The PM will put the changes to a special Labor caucus meeting today. For more, let's bring in economist Saul Eslake. Good morning to you. This sounds a bit Robin Hood, is it? Taking from the rich to give to the poor.
Well, that's what progressive tax systems do. They're designed to do. The people in the top tax bracket with incomes of over $180,000 represent 3.7% of all taxpayers. That's actually increased by almost a percentage point over the last 6 years as a result of bracket creep. They earn 20% of the taxable income, but they pay 30% of the personal income tax. People earning less than $37,000 a year are about 20% of total taxpayers, but they only pay 2.5% of personal income tax. Obviously, people on low and middle incomes are the ones who are feeling the cost of living pinch most. The government's under some pressure to provide additional relief for them, and one way of paying for that, whilst minimising the impact on inflation and interest rates, is of course to take money from somewhere else, and that appears to be what the government's going to do.
Yeah, we'll wait and see exactly how they pan out. But this was announced in 2018, stage 3, so we've had a lot of lead time. Is Mark Riley right there in what he says, that the economic landscape has changed enough to warrant the government to make these changes?
Well, the economic landscape certainly has changed a great deal since 2018. Back then, the problem was, if anything, that inflation was too low. It was below the Reserve Bank's target, whereas today, inflation is well above the Reserve Bank's target, and lots of people are under pressure from increases in the cost of living and falling real incomes. Real household disposable income fell last year by more than at any time since the recession of the early 1980s. That's a very different world from where we were when these tax cuts were originally envisaged. There's still a good case for doing something about bracket creep that's affecting all taxpayers, whether they're high-income ones or lower-income ones, but the government's decided, understandably, in current circumstances, that it's going to prioritise giving cost of living relief to people on low and middle incomes over addressing the impact of bracket creep on higher income earners.
Yeah, so the big question is, will that work for Anthony Albanese, 18 months or so out from an election? And how much will the broken promise issue hurt him?
Well, that's a political question, really, and I'm not a political analyst. No doubt the opposition will excoriate him for what is clearly a broken promise. It will be up to him to defend breaking a promise for the greater good of a large number of people. I mean, the government may well calculate that it isn't getting too many votes from people earning more than $180,000 a year, and therefore they don't have much to lose, whereas they could have a lot more to lose from people earning less than $90,000 a year if he didn't give them more than they were going to get under stage 3 as it was originally legislated, bearing in mind, of course, that people under $45,000 a year didn't get anything from the stage 3 tax cuts, and people earning less than about $90,000 have lost the low and middle income tax offset that was worth over $1,000 to most of them, that was stage 2 of the Morrison Government's tax cuts.
So as an economist, does this make good economic sense?
It's plausible and it's defensible. The one risk, but I think it's a small risk, is that by redirecting tax cuts from higher income earners who likely would have saved some of them to lower income earners who will likely spend all of them, there will be a slightly bigger impact on aggregate spending, and hence some risk that inflation won't come down as quickly as it otherwise would. We'll have to wait and see what the inflation numbers tell us in the second half of this year, after the tax cuts have come in. Remember, the tax cuts are in aggregate equivalent in terms of their impact on total household income to about 2 25 basis point rate cuts, although obviously different people benefit from that than from cuts in income tax. The Reserve Bank will be watching carefully in the second half of this year to make sure that what I think will be a small or marginal impact on inflation doesn't turn out to be larger than that.
A number of economic experts are saying that it is inflationary neutral. Do you disagree with that?
I think it is marginally inflation positive because, as I say, if you redirect tax cuts from high-income earners to lower-income earners, more of the tax cuts are going to end up being spent. You know, low-income earners typically spend every additional dollar they get wherever it comes from, mostly on the necessities of life, whereas higher-income earners don't need to do that. They typically save some of any additional income that comes their way. So if most of the $20 billion was going to high-income earners, some of that would be saved. More of that's directed to low-income earners, more of it's going to be spent. But I think the overall impact will be fairly marginal, as long as, of course, the government doesn't, in addition to what it's proposing to do to the tax cuts, come up with some additional spending measures as well.
Yeah, that money needs to be spent because things are more expensive for everyone.
Yeah.
So it's got to be spent. Saul, thanks for your time. Really appreciate it.